All right, what's up, Facebook? Hey, this will actually be on YouTube as well. What in the world is going on? It is a good question that's difficult to answer. So I just want to show you kind of what we're actually looking at right now, what's happening today, the things that we know for sure, some things that we have to take a closer look at, and just sort of a reality check overall about what's going on between the stock market, the action of the Fed, how that's affecting things in real estate and mortgage rates, of course. How we lost some ground. For those of you who may have experienced that, rates went up last week, and I made one rant video when I was out in Missouri. I'll go into that a little bit more detail just to kind of keep you up to speed of what's going on, how to explain, so that people can understand what's happening and where things are at right at this moment. So let's take a look. First of all, not at those shoes, but at just what's happening in the market. So today, we see the Dow's down a little bit, S&P's down, Nasdaq's down, but remember, this is after the S&P closed hitting another record. So a couple things happened. Fed officials released their minutes, and they basically said that the expectations that coronavirus is going to weigh heavily on the economy. Duh! You can't just shut down all these businesses without that happening. Great insight. So what we'd really like to know is, what is the actual impact going to be on the Fed's actions? That's what we really want to know. Obviously, coronavirus is going to weigh heavily on the economy and it's doing that. But again, it's feast or famine. You're seeing certain things happen. Like right here, this headline right here says, Apple becomes first U.S. company to reach a $2 trillion market cap. Apple becomes the first company, U.S. company, to reach a $2 trillion market cap. So Apple crushing right now. And a lot of this has to do with the businesses that they've set up through streaming and the iTunes store, and a lot of the recurring revenue stuff that they have with apps is really, really strong. And those things have increased the more quarantined people have been. So again, we have this feast or famine type economy. And then even in a situation where the Fed comes out and releases negative minutes, the Dow's only down 85 points. The S&P made a new record today. The S&P 500 made a new record high today, intraday high today, and the Nasdaq just seems to not be able to stop. So you're seeing all this happen. It's like bizarro world. You have all this negative stuff, including an uncertainty with an election. We have not just uncertainty with an election, but a massive different. The difference between Trump and Biden is as far on the spectrum as you can get. So not only do we have division, but we have drastic division. We have some things that are happening in the economy that aren't good, but look, the ultimate litmus test for all this is Wall Street. These are the people who don't care. They don't care about politics unless it affects money. They want to know if companies are making money or not, and companies are making money in the situation. Now, I will also say, and we're going to look at this in more detail, just look at mortgage bonds. I'm going to show you, let's actually just go ahead and dive into that graphic. I'm going to pull that up and get my pencil out so I can show you what's really going on here, because this needs to be zoomed in significantly. Sorry about that. Let's see. Clear? Nope, that's not working. Guess I should know how to use this, eh? All right. So basically what happened here is we lost a lot of ground right here on this particular day. And this day was a very, very bad day for a number of different reasons. But essentially, there's a tax that's been implemented, and this happened, in just the last couple of days. But I have a feeling that the market knew it was coming, and that's why we saw such an ugly day here. Now, there was bond rollover there as well, which happens once a month, just fine. But you can see when we made new all-time highs up here, this was the glory. The glory moment was right here, and that lasted for like over a week, where literally everyone in the VA world, which is where I focus, was getting a 2.25%. It pretty much didn't matter if you were, 680 credit or whatever. Pretty much everyone was getting 2.25. But pricing hadn't changed that much. You couldn't really get reprices. You couldn't really get renegotiations. It's super interesting. But that said, now we're seeing a march back up a little bit here, which is looking pretty good. Now, one of the things that I cannot figure out right now, if I do that, clear, it off? Not allowing me to move it, huh? Can't move it? Well, that sucks. I wanted to be able to show you the intricacies here. So these moving averages usually play a big role in what's going on. This is a really good candle, because remember, higher bond prices means lower mortgage rates. So we're still seeing VA rates in the twos. We're still seeing people being able to get really good deals on purchasing. Refinances have been taxed a little bit. The overall market has been taxed a little bit with that new FHFA stuff. But ultimately, rates are still really, really low, and the Fed is still absolutely buying bonds. Today's candle is super indecisive. So we're up 6 basis points. So basically, it might be better for me to do it this way. We're up 6 basis points, which means not a whole lot changed. But what did change was for the good. So, when we see higher bond prices and the trend moving higher after this downward motion here, which caused rates to spike a little, that's a good sign. That's a good sign. We're about halfway there, and that's a Fibonacci level. So we're about halfway on the retrace before we hit resistance here and then came back down today. So kind of a flat day, even though at one point today we were up 14 or 15. I think actually up 19 basis points at one point today, and we finished up 6 basis points. So anything that's green is good here. Every day, if we can just keep marching up a little bit, that's helpful. What's interesting is that the 10-year was also up today, and mortgage bonds are up. So those are usually inverses. So there's just so many strange things going on. It's very hard to make any kind of predictions. People are asking me every day, do you think rates can go lower? Do you think we've seen the lowest rates that we're going to see? Can real estate prices go lower? There's a lot of things that could still happen. In fact, I do want to put something in perspective here. And I think this is important because ultimately this right here, this is the stock market going back 6 months. So this is the last 6 months in the stock market. So we had the original sort of, out of the gate coronavirus concerns cause this, right? And we all saw and felt that. But then you can see from there, it was just been really a march higher. And we keep, trying to make new highs. And we're really right at those highs where we've been at. Is there a rollover at 27,500? Well, we're at 27,700. A lot of people are wondering about that. Would we touch this level here again and then turn it back and go the other way? The stock market does not seem to want to go down. It wants to go higher. But why? Why would the stock market want to go higher, therefore keeping interest rates from being able to go as low as they could be because of all the action that the Fed is putting in? Again, bizarro world that we're in, where bad news seems to be good and good news seems to be bad. We're seeing that if we go back to, let's see here. Sorry, I'm out of practice. We've got the Democratic National Convention going on. Larry Kudlow's been very active. He is a big proponent of a lot of the things that Trump is doing economically. He's a big stock market guy. I did a whole segment on him one time explaining how him being a part of the Trump administration is part of the reason why we're seeing stocks refuse to go lower. And while that isn't a bad thing for most of us, when you look at the 401k, it helps keep confidence up. It gives you additional options for finances and so forth. The stock market being higher is good. It's a good thing as long as we're not building a bubble, right? And that's what the concern is. The concern is that we're building a bubble. But really what's happening is you're seeing feast or famine. Now remember, the stock market indices, if you look at the S&P 500, it's 500 companies. If you look at the Dow, it's 30 companies. I follow the Dow more than I do the S&P 500. The S&P 500 is hard to follow 500 companies. But when you look at these, and the NASDAQ as well, it's 100. So when you look at those, you see that they're sort of driven by main stocks. There's always one or two, or just one, main stock that's driving those particular indices. And right now, those stocks are doing really well. Feast or famine. Some companies are going out of business. Retailers are filing for bankruptcy. Amazon is hiring 5 million people. I don't know how many they're hiring, but they're hiring untold amount of people. Apple just hit $2 trillion market cap, which has to do with its stock price and not necessarily what the business is doing, but it shows you that the business is doing good enough that investors are flocking in. We've seen an incredible increase in amateur investors getting into the stock market. People who have no idea what they're doing buying stocks. Robinhood, the app that allows you to buy fractional percentages of stocks, you can get them at $5 and buy stocks. That has become a big deal. If you follow Barstool Sports, his name is Dave Portnoy. He's the El Presidente there. He's actually started a day trading, academy. He has no idea what he's doing. So some of those things are really concerning when it comes to stock prices and where they're at. But if stocks can hold up through this, that is a good sign that things aren't as fragile as we might think they should be. How could that be? How could it be if we're not able to go and do many of the things that we normally would be able to do, or the things that we normally have to do, like going to a grocery store, we have to wear a mask, things that are inhibiting us. How could it be that society and the economy is able to truck on? And this is the thing that took me forever to get. Most of the economy was already virtual, right? Think about it. How much stuff are you buying online versus going to a store? By the way, Target up 12% today. Well, what's that about? I mean, it's a bizarro world. So most of the stuff we're buying online anyway. I would say at least 90 to 95% of the stuff we buy is through Amazon. It was already that way. All that's happening now is they're getting 100%. So, not including groceries. So there's certain things that work, that always work. The grocery store will always work. Even in a pandemic, grocery stores are making money. The pizza delivery places, they always make money. Recession, no recession, great economy, doesn't matter. The pizza places always make money. What do the pizza places do right now? Making money. So there's certain businesses that are going to do really well because they're going to do well regardless. There's some businesses that are going to thrive, like a Zoom or technology, video conferencing technology companies thriving right now, tech in general thriving right now. Companies that allow for paperless and easy, simple transactions like Amazon, going to thrive right now. Certain companies that rely on people to walk through the front door, going to get crushed and closed down right now. So there's this huge divide that we already have in the country politically is also now taking place economically. And so these companies that are going out of business are going to spawn new other companies that are going to thrive in the new world. So I believe what you're seeing is you're seeing overall optimism in a reset that should have taken place maybe a decade ago, was forced, our hand has been forced due to coronavirus. And I believe that the majority of investors are optimistic about what's coming around the corner. Because remember, when a company goes out of business, let's say one of these retailers that we've seen, what was it, Forever 21 or so, there's a huge list. One of those companies goes out of business. What happens? Do you think those people just quit life? No. They go try to start something else, or they go work for another company that's up and coming, that's got a chance to make it. So you have those same brilliant people going into a different direction and trying to make something work. So there's clearly generalized optimism here, which is really, really good. That is a very, very good thing, although it may be keeping us from getting the lowest interest rates that we should be able to get on mortgage loans. Although it may be, giving us a head fake. Maybe some people got out of the stock market and now wish they hadn't. That's the hard part. People who are trying to buy houses right now are running into, in fact, let me throw, I need to do this for disclosure purposes. Let me throw my lower third up, which is just my contact information. I'm a VA home loan specialist, the line mortgage, NMLS 155010. So mostly, when I provide these updates, I want you to know what's happening so that okay, hey, rates went up a little bit, but rates are still amazing. Still quoting rates in the twos, for VA, pretty much across the board. To get up to a 3%, in the VA, you have to have a much lower credit score. And so, we've still got these crazy low rates. Had a borrower recently who had to include a spouse who has a much lower credit score. They're still getting 3%. He was like, that's still really good, isn't it? Yes, it is still really, really good. I recently did a video about how to shop for a mortgage. This is something that's really important for people to do. Some people get lucky and run into a good company that's doing good things and treating them correctly. A lot of people are getting solicited by companies that do not have good intentions. They're looking to charge you lots of fees and make as much money off of you as they can. They see you as a washcloth that they need to rinse dry. They want to get every drop out of it. And that stuff's happening too. So that was my buyer beware, my PSA. Like, these are the questions to ask. This is what to do. Don't get screwed. For my veterans and my active duty members out there who maybe have one brief contact with a loan officer and then you just put all of your trust into them, it might make sense to do a little more due diligence on this. Run stuff by me too. Please, I just got a call from an agent here just a few minutes ago who said, hey, I know you do a lot of VA. I have a question. There's someone buying one of my listings that's VA and this is something they're asking for. Is this legit? Use me as a resource. I'll look over your documents, make sure you're getting a good refinance. If an agent out there has questions about a VA offer they've received, give me a call. Let's make sure that we're taking care of everyone in the best possible way that we can, that we're working together, because that's the key, and that's how I'm going to wrap this all up. The key here is that we've got to work together, and we have to look at the opportunities there are to be optimistic. Wall Street is optimistic. Why? They always know more than we do. Always. They always know more than we do because there's more on the line for them than there is for us. Always. Every day on Wall Street, someone goes bankrupt. Every day on Wall Street, a billionaire is made. This is just how that world works. They're plugged in. They have more information than we do, and they're very optimistic. Or they at least believe that the path of least resistance is higher in stocks. So if that's the case, and there's very little else to invest in, then I think you're going to see the stock market continue to go higher. If it were going to go lower, I feel like we'd have seen that by now. And especially on a day like today, when the Fed comes out and says, weigh heavily on the economy. Remember what they said? Let's see what I have this on too. Fed officials expect that coronavirus will weigh heavily on the economy. That's a quote. On the same day that Apple becomes the first U.S. company to reach a $2 trillion market cap, and the S&P 500 makes a new intraday all-time high. Does any of this make sense? It doesn't if you're just reading the surface level news. But if we had more insight, I bet you it would make sense to us. So let's listen to the signals here. The signals that the market is giving us is saying that things are better than it may appear. And so we need to understand that. There are a lot of people who are wanting to buy real estate right now that are frustrated. It's hard to get a house. It's very competitive. It's hard to be in such a seller's market. And they say, I wonder if it would be better to just wait. What's the function between waiting and the cost of waiting and rates potentially going up? Well, what if rates go lower? What if prices go lower? Anything is possible. So the best thing to do, and this is to answer 90% of the questions I've been getting in the last 2 weeks, is to stay patient and stay active. Stay patient and stay active. If you're looking for a house, keep looking. Keep looking. Tour as many houses that fit your criteria as you can. Look online every single day. Make sure you know exactly what the inventory is. If you just do that one thing, stay patient and persistent, then you will win eventually. Because you'll either figure out where the market's at, you'll have such a good feel for where it is, you'll know a great deal when you see one, or you will eventually, just by sheer numbers, come across that perfect house. And you'll feel totally okay paying whatever it is they're asking for it. Because when you find the perfect home that you can see yourself in forever, it's worth it. Remember, with real estate, we don't have to be geniuses. We don't have to have perfect timing. We don't have to get the market just right. We don't have to get the lowest price and the best interest rate ever. All we need to do is have a long-term outlook, and we will win. All right, that's it for my rant today. Hopefully that gets you caught up on where interest rates are, what's going on. My expectation is that we could see rates go even lower. However, I couldn't get us zoomed in on this. I'm not sure quite how to exit the pin situation for some reason. Maybe if I can undo that. There we go. All right, so this is what I'm waiting for. So I'm just going to show you what I'm looking for. Really, tomorrow is the day, because what's happened here is we've basically gotten to a point where there's a tug and pull that's going on here, and you can see the tug that's taking place on this side just happened today. See the candle wick? This is showing you that it's heavy. The pricing of mortgage bonds here, it's heavy, so it's looping down. Down here, though, it's light and it's floating up. So we've got this range right here that something's got to get figured out in. And that's really what I'm waiting to see. If we can see that this becomes support again and we can go and break this, then we could go back and touch those new all-time low mortgage rates that everyone's been waiting for. We'll have a chance at that point. We'll at least be pointed in the right direction. If we do retreat back to here, it's not the end of the world. Rates will go up a tad. We're still in really good shape, but we'll want to see that this support will hold again because it's already held twice. And remember what happens when you keep knocking on the door. Eventually, the door opens. So we don't want that to happen. We have the Fed behind us. They should be able to help us. We'll just have to wait and see how it goes. So that's it for today, guys. Hey, share this video if you would like to, if you think it's valuable for anyone in your sphere, or if you would like to help make the rest of San Diego smarter than everyone else. Thank you, guys.